Hello, friends, and welcome to the Psychology of Trading seminar. Let us discuss further some very important aspects of psychology of trading, detail them, and give you some solutions on how to deal with the problems related to the psychology of trading. Now, as mentioned before, if you want to learn how to trade and you seek a course or you seek information, you will more than likely find a lot of information about technical analysis. You will find some information about fundamental analysis, less than technical, of course. And you will also find some information about risk management, but less. And when it comes to trading psychology, you will find very little. It's a difficult problem to deal with, and I will explain why. But let us start by saying that trading psychology and risk management are by far the most important aspect of trading. We're talking here about more than 80% of trading. One of the big mistakes of beginners is to focus on strategies and technical analysis, maybe a little bit of fundamental as well, and forget about psychology and risk management. Now, these guys are doomed to failure. They might learn the hard way if they're not mentored the right way early on. So the topic of psychology, especially psychology, is conveniently avoided. Not talked about a lot because it's difficult to explain and difficult to provide solutions for. Now you have to understand that it's good to have a good strategy. It's a necessary thing. But if your mind is not right, if you don't set your mind the right way, you will never become profitable, even with the best strategy in the world. And there are a lot of good strategies, and they're easy to find on books, on the net. That's not a problem. The challenge is in finding the right mindset. So I'll give you a few tricks here. Hopefully, they will help you deal with the issue of psychology and optimize your trading experience. Now, why is trading psychology so important? Let's take an example. Trader A has the best strategy in the world, but no self-discipline, no risk management strategy. On the other hand, I have a trader who using very simple strategy that provides profits, but it's a simple strategy. But this guy is highly disciplined and have a risk management strategy. And more importantly, this trader sticks to that risk management strategy. Who's going to be the winner? Well, obviously, trader B will be the successful guy. So you can do very well with very simple strategies, and you can lose all your money with the best strategy in the world if you can find it in yourself to discipline yourself. So how to discipline yourself? That is the question. Now, trading is very hard. Extremely hard. Not because it's hard to find a strategy. That's not the reason why. Because trading challenges the human nature. It goes against human nature. We are very emotional beings. We make decisions based on emotion. And why some marketers are very successful is because they find a way, or they can actually play with our emotion and make us buy things we don't need. They appeal to our emotions and we fall into the trap. That's why marketing is a very successful field. So we make decisions based on emotion first. Our emotion dictates our decision, and then after it's all over, we justify it with logic. So you see the point here. We think we use logic, but no, we use emotion. And once we do it, we justify it with logic. And doing this in trading is a killer. So when you trade based on emotions or intuition or whatever, these things that are irrational, you end up losing money. Because you don't use your logic until it's all over and you start analyzing. And you find out that your emotion dragged you into a bad situation. So we want to do the opposite. Is there any way that we can use logic before emotion when it comes to trading? And that is the challenge. Most people do trust their gut feeling when they make a decision. You don't want to do that in trading. Forget about gut feeling, intuition, sixth sense, or whatever you name it. No, don't do that. It's a killer. So this is why I said trading goes against our nature. That's the simple reason why people lose money. That's all there is to it. It has nothing to do with strategy. So how do emotion actually jeopardize our trading experience? Well, by chasing the market higher, by getting into revenge trading, these are examples, by becoming greedy, by becoming fearful, by not following the plan, and there are other issues. But it boils down to one fact. Most of us cannot control emotions. It is very hard to make decisions based only on logic when it comes to trading because things go so fast. Sometimes you think that you made a decision based on logic, but you're actually making it based on emotion, and you do not realize that until it's all over. So, becoming a good trader is almost a spiritual journey. It is actually a spiritual journey because it comes down to becoming a master of your own mind. It's a journey of self-mastery where you start controlling yourself, when you start reading your emotions, controlling them, and letting your logic rule, not your emotions. So profitable traders, in a way, are spiritual people who do control their mind and their emotion. When I say controlling your emotion, it doesn't mean that you will not feel some emotions. You're a human being, so you always have thoughts and emotions. But some of us can control them and not let them affect you despite their being there, and others will not be able to control them, and they will make decisions based on emotions. So do not trust your emotion when it comes to trading. Trust only your logic and your plan. Become like a computer. So emotions arise from thoughts, right? And these thoughts will provoke biological reaction in your body. So you think, you produce thoughts, these thoughts will produce biological reactions, and reactions will lead to emotions, and emotions will lead to decisions. These decisions, on average or in total, will be harmful in trading. So if we think that our trades do not come out as a success, we worry, and that can lead to negative thoughts, and then negative emotion will follow, which is usually some variant of fear. So the way it happens is that, let's say I get into a trade. The trade is not successful, not profitable. Let's say there is a loss in that trade. This usually can lead to thoughts of worry or in other words, what we call negative thoughts. These negative thoughts that will pop up will lead to negative emotion, and overall it will be negative experience. This event can be connected to other events of your life that have nothing to do with trading, like stigmas, like other bad experiences with trading, like the time when you were pushed away by your girlfriend or your boyfriend, or like the time where you lost in another business. So you will get all these mixed up bag of thoughts that will make you more and more negative, and you will keep bringing that negativity to new trades, and the cycle will keep going on. So we all have some kind of negative previous experiences of losses, of self-esteem, of being rejected, or etc. So a loss in trading can remind you of all of that, which will start a cycle of negative thoughts that will keep hanging around you, above your head, as long as you're trading. So the idea is to develop the confidence of not connecting the bad experiences, not connecting a loss in trading to other experiences in your life. Your head might tell you so, but realistically speaking, if you have a loss in trading, that does not mean that it has anything to do, or it is correlated with experiences you had in your childhood, or you had yesterday or before yesterday, or etc. Completely unconnected. But your head will tell you, or your emotions will tell you otherwise. And this is where you have to understand the differences and be able to disconnect all these random thoughts that pop out in your head. You cannot change your biology, it will happen. Your role is to disconnect these thoughts. A loss in trading can remind you of your dead father, or the day where you got kicked out of school, for example, or the day where your girlfriend or boyfriend rejected you, etc. So you get all these bad thoughts that keep coming up. So disconnect them. It's not because they come up in your head that they are true. They are not. What happened is that you had a loss in trading, and you will make up for it later. So you have to train yourself to transform negative thoughts into productive thoughts that will help you improve. If you have negative emotions, forget about them and focus on why you lost that trade. You lost it because it's part of the probability game, or because you made some kind of strategy mistake or some emotional mistake. Look at it, learn from it, and improve it. But do not fall in the trap of emotions. Now, this is highly linked also to lack of discipline. If you're not disciplined, that means you don't follow your plan. If you don't follow your plan, then you will lose. Now, there is this nice metaphor about discipline, which is a house building. Imagine trading as a house building. Now, the first thing you need to do is the land. Find the land, which is basically trading. Then you look at the type of constructions, okay? Which is, what do you want to trade? What type of trades you want to get into? Then the design, which is the strategy. Then you can build the foundation, okay? Which is the psychology. How we manage ourselves, emotions, and how we stick to our strategy. How do we remain disciplined? So it's all about execution. If you do not have the right foundation, even if you have the best architect, the best land, the best type of constructions, with a poor foundation, everything will collapse. Okay? So foundations are very important, and foundations in trading is psychology. And unfortunately, they're not taught these things, and they don't they just forget to look at these things. Psychology is everything in trading. It's at the same time the forgotten topic, the hardest topic to deal with. Why is it the hardest topic to deal with? Because you're dealing with yourself. And you're the only one who can master yourself. I can give you clues on how to conquer yourself, but you have to go inside your head yourself. I cannot go inside your head. And very few people can teach you to go inside your head. It boils down to a spiritual experience. How can I get into my emotions? Look at them in their eyes and not let them destroy me when I'm trading. So once you have this strong foundation, you can start building floor after floor. If you have very strong foundations, you can build 10 floors, 20 floors, 30 floors, 100 floors. And each floor is more profits. Okay? So foundations. It will take you a few weeks to get a good strategy, to learn the technical analysis. Few more weeks to learn about fundamental analysis. But the rest is the hardest. And the rest is conquering yourself. Okay? Now, write down why you began trading in the first place and what do you enjoy about it. Write it down. Explore it. Look at it. Analyze it. And keep looking at it every day. And try to find out why I'm asking you that and why do you have to connect that to emotions. It will help you a lot. So think about it. I'd like you to think about it. Anytime you are unsure if your time is dedicated in the right direction, go back to this list and remind yourself why you do what you do. You need to look at it all the time. Why you're doing what you're doing. What's the reason? Now, there is a method developed by a psychologist that is called the DOT method, which is doing, outcome, thinking. Okay? In other words, you do. Once there is an outcome to what you did, then you think. So you don't start by thinking. So you have your plan. You have your facts. And you process your facts mechanically like a computer. You have your rules. And based on that, and that only, you act. Okay? That's trading. You have a strategy, you have your rules, you have your facts, and as soon as everything is on the green, you act and you get into a trade. After you get into a trade, something will happen. You either will be profitable, you'll make money from that trade, or you lose, you'll be unprofitable from that trade. Only after that, when the trade is over, where you can start thinking and contemplating your emotions. So of course, if you make money from that trade, you will be happy. If you don't make money from that trade, some negative emotions will pop up. Then you want to analyze them. Okay? So you don't analyze your emotion until you do and after there is an outcome. You don't watch, you forget about your emotion initially. Not easy. That requires training. But you need to start by doing like a stupid computer. You should also consider trade as profitable or unprofitable, not as successful or unsuccessful. In other words, when you trade, a trade is a gain or a loss. But success or not success is another thing. A trade may be unprofitable but successful, and a trade can be profitable but unsuccessful. Successful when you follow your strategy, when you do the doing like I just mentioned above. When you follow your strategy, you're disciplined. Then every now and then you will have some losses, some unprofitable trades. That's part of the probability game. But overall, you will come up winner. But sometimes you can get into a trade, make money, but without following the plan. And by repeating this stupid act, you will end up blowing up your trades. Okay? So never consider, when you finish your trade and you analyze it, look at if it's successful or not. Successful is when you followed your plan. If you didn't follow your plan, it's not successful, even if you made money. So you have to analyze all your trades and qualify them as successful or unsuccessful. And like I said, has nothing to do with profit or non-profit. So a losing trade can be successful if you have managed to follow your strategy and your rules. You want to be like a computer. You want to shrug off your emotion. Forget about them. So when you evaluate a potential trade, look at the facts. Try to stick to the facts. For example, I have in my strategy 3 or 4 criteria for entering. Then as soon as I have the green light on these 4 criteria, I will get in. So do I have A? Yes. Do I have B? Yes. Do I have C? Yes. D? Yeah. Did I look at him logically or did I look at him emotionally? Did I skip one of them because my emotion dominated me? It could happen. And you need to make that evaluation at the end when you have the outcome. It happens a lot and it's human. So you have to think like a computer. What a computer will be doing, because if you give it to a computer, the computer will not have emotions. The computer will not think. If the computer is well programmed, if it sees that A, B, C, and D are there, it will get in. If it sees that one of them is missing, it will not get in there. So try to act and think like a computer. And of course, once you enter the trade, make sure you follow the limits. Stick to your stop loss and you take profits. Your exit rules. And of course, at the end of the trade, evaluate rationally what happened. Did I stick to my plan? Did I get overwhelmed by emotions? If so, well, I need an action plan to deal with it next time. How can I be like a computer next time? I got betrayed my emotion this time. How can I deal with that? And if I cannot do it, I should get out of trading. At the end of each trade, when you analyze, you think, you have emotions, absorb your emotion. Watch them, analyze them, let them slide away. And don't get into any new trade until you're finished with those emotions, even if it takes you days. Don't get into new trade while you're still overwhelmed with emotions. So make sure your emotions are off and gone. And don't get into any other trade until you're clear-headed. Now test this. Test this. Try to do it. If you're trading, do your trade based on your rules. And after the outcome, analyze the situation from an emotional perspective. Of course, you want to analyze it from a technical perspective as well, and fundamental. But add this dimension of psychology. Did I get betrayed by emotion or not? Ask this question yourself all the time at the end of each trade. Very important. And then write a feedback. Write a little paragraph that explains the whole thing. Just like a client is coming to consult with you, and you're analyzing your client, and you write a report for your client. Write a report for yourself, a small report. Okay? Some feedback for how you treated the trade. And if it's not successful, well, try to answer why you were not successful. Why you didn't stick to your strategy? What kind of emotion betrayed you? You need to learn these lessons. Or just leave trading. Now, here are some guidelines. Very important. Now, this will help you with your psychology, because if you don't do these things, you will always get overwhelmed by your psychology, no matter how good you are. Always get into good risk to reward ratio trades. Don't get in any trades where the reward is not more than the risk. Hopefully at least twice. Okay? Now, if you get into one-to-one trades, it's not a good idea. In the long term, it's not good. Don't get into trade with the loss can potentially be too big for you compared to your capital. For example, a trade where you're risking 10%, 20%, 30%, or so on, or even 5% is a lot. My rule is never more than 2%. Always place your stop loss at technical invalidation, meaning you put your stop loss where your theory or your hypothesis about the trade will collapse. Not based on some pips, not based on the idea that I will put 50 pips away, 20 pips away, 100 pips away. No, it's never about the number of pips, but it's all about technical invalidation. Okay? You have a theory or you have a certain technical method, so you have a hypothesis. Okay? What will be the level that will invalidate your hypothesis? That's where you put your stop. And I explained that in other places, in other videos. Now, of course, don't be stupid. Don't go all in one. If you go all in one, then sooner or later, it will be all gone. Don't get into trading because you want to trade. Okay? You don't have to trade. Trade only when your strategy tells you to trade. You have to be patient. It's okay not to trade for a week or 10 days or 2 days or 3 days if your strategy tells you so. Your strategy is the dictator here. They tell you what to do. And of course, you trade with a strategy. Not trade because you feel like this is a good trade or because somebody told you so. Trade because your strategy. So you have to have a clear strategy and you follow your strategy. It's okay to get strategy from others if you're convinced yourself that it's a good strategy and if you have tested the strategy. Now, if a trade goes against you, don't move your stop loss. Okay? This one is big because a lot of traders do that. They cannot stomach a loss, so they will keep moving their stop loss and with very bad consequences. You will have losing trades. There is no way around it. Losing trades in trading is the cost of doing business. In every business, there are costs. There are overheads. You have to pay people. You have to pay for buildings, for electricity, etc. In trading, you pay with your losing trades. Every strategy will have a percentage losses, which could be 40, 45, 50, 60%, whatever. So that loss is the cost of doing business. So you have to keep trading as long as your strategy tells you so. That's how you're going to make money. That's how your wins will exceed your losses. If you are feeling very bullish or bearish, reanalyze the situation. Why are you very bullish or bearish? Don't be foolish because you think so. Don't get into crazy situations because you're doing so. Stick to your strategy. If you feel bullish or bearish, that's good, but don't let your feelings overwhelm you. Is your feeling correlated with your rules? At the end, it's your rules that matters, not your feeling. Don't overtrade. Don't just trade because you feel like you want to trade. Now, if you end up with a very profitable or unprofitable trade, take a break, analyze, and I emphasize also the profitable. When you have some good wins, well, analyze the situation. Good, congratulations. But is it really a successful trade? Is it? Did you get that profit by sticking to your plan or by doing something foolish? If you're doing something foolish, well, you need to acknowledge it and don't do it again, because next time it will be very unprofitable. Okay? So you need to understand whatever you're doing, and that comes by thinking and analyzing after the outcome of a trade. Don't get into revenge trading. If you lost a trade, don't double your bet next time because you want to make up for it. Never do that. Just keep going with the plan. Now, this is one of the killers as well. One of the bad situations for traders is one of the bad emotions for traders is the fear of missing out. When you enter the wrong trade at the wrong time, the odds are against you. Let's say you have a strategy with a winning percentage of, let's say, 52% or 60%, let's say. Now, if your emotion betray you and you get into the trade at the wrong time, maybe too early or too late, then this probability is no more valid. If you entered at the right time, the odds were with you. Now they become against you, or the probability of winning becomes against you because you get into the wrong strategy now. And you don't even know it. And at the end, you start telling yourself, why did I lose so many trades? I thought this strategy was supposed to give me more than 50%. Well, it's because you changed the odds. You didn't enter at the right time. You entered 10 pips earlier or 20 pips late or whatever. So make sure you become like a computer and you follow your rule as they are, so that the odds remain in your favor. Because if you do so, you become a gambler. And a gambler is somebody who's doing investments where the odds are against him. And gamblers will perish sooner or later. No matter how lucky you are, you will perish at some point. And the higher you rise, the harder you will fall. You don't need to trade every setup. Trade the relevant ones. You have to wait for the right one, for the best one, for the right opportunities. And you need to have a strategy that tells you exactly what are these. If you miss out on a trade or lose one, no regrets. Regrets is a negative emotion. You don't want to perpetuate that. Be patient and stick to your rules. Stick to your rules. Discipline is everything. And to remain disciplined, you need to conquer your emotions. So we are human beings. There is no way to avoid emotions because they are part of our constitution. A good trader is somebody who can conquer the emotions, is somebody who can control his actions because he can control his emotion. And a bad trader is not aligned with his mindset and therefore cannot control his emotions. A good trader is aware of bad habits and good habits. Whenever emotions pop up in his head, he can see them, he can control them. And he can let the rational thinking supersede the emotion and remain disciplined and in full control. So do not trade if you cannot control yourself. Learn to control yourself before you trade. Do not get into any trading experience without understanding that psychology is everything. That's where you will make money. It's psychology, not technical analysis.